Hey everybody, Mike Shorr here, short-term options instructor here at Prosper Trading Academy, and I want to give you guys just a quick overview on what our room is, what we do, and maybe I can even get in a little bit of an explanation of what we're looking at. So this is the layout that you'll see most of the time in the room. It's a combination of two different platforms that we use here. What used to be called Live Vol, I think it's called Sterling Vol Trader now. This is an options execution platform. You're also able to do some position analysis. So when we're actually working with, once we find ourselves in a place where we want to put out a signal, this is what we use to actually figure out what signals that we want to put together and what the price is going to be and so forth. This other thing, the other side, the right half of the screen that you're seeing here is the is Thinkorswim. We have most of our day trading methodologies, or just trading methodologies in general. No, our day trading methodologies, we're going to be using a 5-minute chart on most of them. On 2 out of the 3 we'll be using 5 minutes. So that's what this is, a 5-minute chart. Really, these are just bar charts, and you're seeing, this is some volume profile that you're seeing here. The red line is the point of control, which means the price with the highest amount of volume traded at it usually ends up, especially in short-term trading, it acts as a support and resistance point. This middle chart here is a volume comparison chart, which basically says I want to take the slice of trade that we are at now, this piece of time, let's just say this 5-minute bar here, and I want to compare that to the average of the 5-minute bar over the last 20 sections or sessions. So when you see lines that are below the zero line, that means that volumes are less than that 20-day average, and when they're above here, that means that the volume is stronger. So oftentimes with our signals, we are going to look for volume confirmation, meaning that not only are we seeing a move, but we're seeing a move that is happening under volume, which makes it stronger of a signal. This bottom thing here is called the squeeze. This is a squeeze methodology. This is one of our day trading methodologies. Essentially what it does is it tags when a market has been in a consolidating period and then that consolidating period has exploded, and we use that indicator for one of our day trading methodologies. This is where these indicators are. There are no squeezes. I'm doing this on a Friday afternoon, so it makes a lot of sense that we're not seeing a lot of things that are moving, because it's Friday on a day in August, and there's not a whole lot of interest going on. This is what you'll see for the most part of the day. I do have some other charts that I bring in just because of lack of real estate here, but that we have other indicators. This is one of the indicators that we use. It's called the relative price movement, and essentially what it does is it identifies stocks that have moved, broken out of a certain range, a certain multiple daily range, and it's done so under volume. So what you're looking for are our indexes here above 50. Anything above 50 is a qualifying candidate for that. And essentially what this is saying, and so we'll look at something like NVIDIA, who had earnings today. So it makes sense that we have about 143% of the normal 20-day average volume on a day like today. Why? Because you can see all day we've had higher than normal volume. So this is one of the signals that we use. We use the opening session, and actually when I said that we are using a 5-minute chart, this is the only one that we use a 15-minute chart for, at least for our entries. And what this does is this measures moves outside of the 5-day range, high and low. That's what these purple lines are. It defines what that day range, that opening day range is, and then we make moves away from that. We don't want to get too far into depth in this, but that's what this is. It's a volume and price momentum indicator that gives us signals for day trades. The last one that we use for day trades is something called the gap fill. And I'll bring that into here. And what this does is this identifies stocks that have gapped. What is a gap? Let me bring up one here in applied materials. That's a gap. Yesterday's close is this little green bar. Today's open was the top of this red bar. And what we do is we look for a retracement back into this gap, because when it does retrace back into this gap, and this will be a prime example of that, in Deere. Let me see if I can make this a little bit clearer for you. There we go. Okay, so we have we're looking for at least 1.5% gap up or down to even consider being part of this. But Deere had a 2.3% gap down. And as we see, as we go back into this, and we use a 5-minute chart for this, not 15. There's a 5-minute chart. We look at the first 2 bars. That's going to be the definition of our gap that we're going to go. So we take the high in the case of a gap fill buy. We take the high of the first of these 2 bars, which is here. In the first bar, the high was 134.22. As soon as we tick 134.23, that's our signal to get long. Typically, we'll get long an option that has at least 4 days till expiration, and that it is a we'll do at the money. And so we get long. In this case, we would get long an at the money call going out to next week, and you can see how that would have worked. Our first target is usually not usually. Our first target is a 1/3 of the gap fill. Our second target is half of the gap is filled, and then our third price target is a full gap fill. And so you can see that Deere, just as soon as it ticked there, it really never came back. A little bit of a pullback here, and it came and just kept on going. Not only did it fill the gap, it actually kept on going. But that's that is the third of our day trading methodologies. So remember, we have 5 total methodologies. 3 of them are day trading. 1 and 2 of them are going to be swing trading. Swing trades, the main one that we use is this artificial intelligence platform called Vantage Point. And just quickly, what it does is it flags momentum. It tells you about direction, bullish and bearish momentum, when that there are triggers for when that occurs. So we're seeing one hasn't happened quite yet here in Boeing, but we're seeing that this downward trend is losing momentum, and what we're looking for our first trigger is this blue line, this predictive line, move above. This is just a simple moving average, this black line. Then there's a couple other things in here, like this is the predictive range. This red and green histogram here, that is called the neural index. That is a measure of short-term weakness or strength. And then these are called the predictive differences, and what you want these are confirming indicators on what you're seeing up here. In the case of a bullish indication, you want all 3 of these moving upward slope, meaning pointing up, and in a bearish situation, you want all 3 of those moving down. So that is a quick overview of the Vantage Point platform. The third swing trade that we use here is something called an inside bar. What is an inside bar? An inside bar is just as the name says. It is a bar that's inside another bar, and we're looking at it's another breakout type of move type of thing. So if I'm not going to get too far into it, but as an inside bar triggers, which let's look at something like let's see, Adobe was on an inside bar today. We see that yesterday's bar is inside 2 days ago's bar, and then this is today. We use a daily chart for this. As soon as we get in, and it moved down, as soon as we get 1% below this low here of the most recent, the inside bar, that's our trigger to get short. These are not day trades, these are swing trades. So we'll be doing spreads with these, usually intending to last around 5 days. Now this happens not to be one that we took for a number of different reasons, but I wanted to show you that this is something that we track every day, and it's a live updated feed, and throughout the day we'll be monitoring if and when it triggers, and when it does, then we will confirm that we do want to act on that inside bar trigger and move. Just because we get a trigger in something doesn't mean that we put together an actual signal that comes out for us to follow in the classroom. But that is the long and the short of what we do quickly here in the short-term options room on a daily basis. Hope this is helpful for you and look forward to seeing you in the room. Thanks a lot. Again, Mike Shorr with Prosper Trading. ProsperTrading.com is the website.